Hello, everybody, and welcome to the Crypto Hipster podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, and amazing people all around the world of crypto and blockchain. And today I'm on the ground at Consensus. Day 3 of Consensus has been a great conference. I highly recommend people come. And today I have an amazing guest. I have the Chief Executive Officer of Bank Social, John Wingate. John, welcome to the show.
Thank you so much, Jamil. Thanks for having me.
You're very welcome. Thank you for joining me today. So let's kick things off and ask you first, what's your background, and is it a logical background for what you're doing now?
I'd like to think so. My background, excuse me, little hoarse from a lot of talking yesterday. My background is as an entrepreneur. I would say primarily, though, over being an entrepreneur, technologist. Since I was a kid, me and my brother, right? Programming when we were 6 or 7 years old, from the early days of, even pre-internet, more peer-connected systems, and the early evolutions of the internet, the whole wave. We were here for the whole wave. So, and technologists the whole time. Also the entrepreneurial spirit. Was a part of a company, same company, got exited twice to a big company called Cart.com. They do omni-channel commerce, a lot of payments, a lot of ERP systems, a lot of high throughput. You know what Black Friday looks like in retail, right? And so that's my high-level background. I've always been interested in innovating and bringing innovation to specific verticals, and got started in Bitcoin because of the company I was working at, and the team I actually have now is mostly from that. My development team is mostly from there. One of the developers that I was working with told me about Bitcoin in March of 2010. And I've been in the space ever since, looking for an entry point, a maturity point, let's call it. Just like the internet had its run up from the late 80s to the mid 90s, and then it had a maturity point in 2000, and then what we really know as the internet, I would say, was born between 99 and 2003, 2004, right? And so I think what we're seeing is similar here, and I've been waiting for the entry point. We were waiting for the entry point. We thought it was in 2017, 2018. Turned out that no, that was not the maturity point. That was probably the early minority coming in, or the early adopters kind of peaking. And so when 2020 came around, I noticed a shift in the types of people, the types of developers, the types of ideas that were coming to the space, and said, okay. And then of course you started to hear about it a lot in the media. The media was starting to pick up on it, and that's typically a good time it sometimes can be late in this space, though. I think so many people misunderstand what crypto is. Yeah, everybody thinks crypto is Bitcoin, like those two things are mutually inclusive, and they're so not, right? So got involved in the space and back in the space, and as a builder or as an entrepreneur. Let me say I've been a builder in the space since 2010. As an entrepreneur, got involved in the space in 2020. We launched the first DAO in the United States that did an actual loan to a business through the DAO mechanism, through a token. We said, there's more here that we can do as a community. What is it? And I went out searching across the world and came back to really this what we'll talk about here today in member-owned banking, credit unions, member-owned banking, cooperative financial institutions. It really exists all over the world. So this model is replicatable. What was interesting about American credit unions is that they were so large, 120 million members, over half of the bankable population, but very small in deposits. So what that tells me is that when I tell you about what a credit union is, owning your financial experience, you love that, but then when you try to use it, you can't put money into it, right? So we said, okay, there's a real opportunity here in America. We call them analog DeFi, credit unions, member-owned banking, analog DeFi. 40-year-old technology. They're still working with stuff that was built in the late 90s, and they have the ability, and they have the matched ethos of what the DeFi community, the Web3 community, it's about ownership. That's where we're going. We're going to the ownership economy. Nowhere better can you own your financial outcomes than a non-for-profit financial cooperative. And I'll just say this, and then we can go on to your next question. The difference between a bank, a for-profit bank, and a non-for-profit financial cooperative is the shareholder structure. And I'm not advocating for shutting down banks. I want to be clear. I'm not that guy, okay? I think capitalism needs to kind of find its path, right? Like electricity, least resistance. But it needs to be fair competition, right?
Yeah.
And so banks have the shareholder model. They give profits to shareholders. That's why when you go get a loan from a bank or from a credit union, the credit union is 1.5% lower, just out the gate, because all the profit doesn't go to a shareholder. There is no fiduciary responsibility from the executive team to a shareholder that is not you as a customer, as the depositor, the uninsured. Why do you think there's insurance there's insurance at credit union, but insurance at FDIC for a bank is because you're an uninsured creditor to the bank. How much money can we extract from you? They are the original MEV bots.
Wells Fargo's MEV bot. I like it. That's what might be my title of this interview.
There you go.
Yeah, it's good. Interesting you talked about 2017. 2017, I was an advisor on a startup token that failed. But I remember going with a friend of mine to like rural Pennsylvania and talking to credit unions, and the women, and the men and women there, like, we understand what you're talking about. There's just no way crypto will ever get into a credit union. It looks like it has, but what if I don't, what Bank Social is all about, and then what's the future of credit unions, crypto? Yep.
So when we tell them crypto, I do a bunch of talks on open banking to the credit union industry, the banking industry. The CFPB has come out, Rohit Chopra, who's the director of the CFPB, he's come out and used two words that I think are extremely telling. He's used, and I'm not paraphrasing, this is an exact excerpt from things he said. Open and decentralized systems will have to be utilized in the future for open banking, for people to own their data, right? So the CFPB, for all that people may not like about it, it does do some good things, right? It does. It's, consumer protection is its primary focus, and I think moving to open and decentralized systems where an Equifax or a TransUnion is not a honeypot of data, right? And if I give you my data and you make the mistake of opening APIs up to share it with somebody else, then that should be your responsibility. If we use cryptography to sign off on all that, I have proof that I only gave you.
Yeah.
Right? And so member-owned data, it's not just, to me, crypto is cryptography, right? And because of these little spaceships we have in our pocket, the same cryptography that's been used in point-to-point communication in a data center 25 years ago is very similar to the technologies that we're using now. It's just that we can now do it in our pockets. And yeah, we're doing it in some unique and novel ways, but the underlying cryptography, the underlying mechanisms are the same. That's how I talk to credit unions. We're not talking about, specifically a Bitcoin or specifically a specific coin, right? We're talking about a new type of Web3 and evolution to a new type of technology. And when they start hearing these types of things paired with the coming regs of open banking, they start to question, well, how am I going to be able to step into this world of ownership, the ownership economy, the mandated ownership economy from the CFPB? How am I going to step into it? Well, this is how you step into it. There's really no other way than giving the member the ownership of the data, right? Because the other thing the CFPB says is they're going to need to be able to take it with them to another financial institution. That sounds like a DApp to me.
Yeah.
It sounds like a DApp. It sounds like I have everything in my wallet, my identity, my money, my everything, and I just plug it into whatever institution I want for whatever period of time I want to give it access. And then I revoke access if I don't want it. And those institutions probably don't need to be sharing my data. If you want me to go give it to company A because they need to do the verification for my loan, tell me. I'll go to company A, I'll push the button over there. Easy, boom, done. Identity transfer, right? that's the open and decentralized world, the Web3 world that's about to come. And again, because of the ownership model of credit unions, you own the rails. This is going to be something that credit unions are embracing already. We've got, I'm not going to go into the numbers, we have a bunch of credit unions already on various systems that we provide. And what we provide is what we're calling an open banking system. You know, part of that is kind of antithesis to what crypto's all about and what Web3 is all about. But at the end of the day, how many times has any company here not been able to, or not used a TradeFi component in the ecosystem of, you know, their Web3 ecosystem? It doesn't happen. Okay, even in the early days of Bitcoin, when we were on the dark web using MoneyGram to send money, or Western Union to send money to each other with, you know, sending our addresses, and then that guy, you know, that was like the early day of Bitcoin, right? It's never been without that, and it never probably for a long period of time, 10 years, will transition out of that. And I think the best way to get to where we own our financial outcome is to own the bank, to own the rails, to own the access to the Fed, to own the access to RTP, to own the access to credit card account openings, to own that. Like, why do we need 25 intermediaries in between us? And I think that's one thing that the crypto community needs to understand, is that, you know, I see a lot of companies launching things and they're like, oh, we're doing something with MoneyGram. Well, do you know how many intermediaries there are in between? It's just more cost, it's more intermediate, it's just, you know, it's not the system, it's not the evolution that we need to have. We need to own. Web3 is about ownership. We need to own the institutions. We need to own. And where's that regulated model already available? In member-owned banking in the form of credit union. Our regulator, you're about to go into regulation.
Yeah.
We'll reach that subject really quickly. We had our talk yesterday. The NCUA, Vice Chairman Kyle Hopman, the NCUA, which is the FDIC and Fed for credit unions. So credit unions don't report to the Fed, they don't report to the FDIC. They report to the NCUA. Completely different thing. The FDIC and the Fed don't have authority, it's all the NCUA. And the NCUA is the only regulator in the United States that's issued positive guidance for distributed ledger technology, Web3 technology, to go forth and conquer. Every other regulator has either not issued anything and been vague, which I'm okay with that. I'm actually okay with that personally. Okay. Or they've issued written, you have to get written notice of non-disapproval. So you got to go ask them for permission. And so because we've got this environment that's receptive and a community of financial institutions that are already about people owning their own bank, oh, well, what are we looking for? What more do we want here? We've got it.
That seems like the solution path to me. You know, I didn't know that about the credit unions. That's good.
Not a lot of people do. Well, we started the first Web3 focused credit union. Okay. But there's 25,000 people in here, right? We'll all be Web3 natives forever. We'll connect the apps to pancakes and pour syrup on them, and we'll do all that, right? Our mom probably won't. The next generation, who knows if they will? They want financial freedom. They want to own the outcome. Will they be in the same position in 15 years that we are now, pouring pancake on syrup? Probably not. It'll evolve past that. So we've already created a credit union called DeFi. So that's a federal credit union. We created it in conjunction with, and it's in its final stages. So I'll call it proposed for right now, but it's like done. DeFi.coop. That will focus on Web3 natives, but our open banking platform is built for any credit union, right? 120 million people who just want access to fairer scales of economy, right? Who want access to tools that they obviously aren't getting in very many places, and they want ownership of their outcomes. That's it.
So I understand what you said about going to institutions A, going to institution B, and not having them share. The whole private blockchain infrastructure is built around this concept of consortium, where they, like, especially with the hedge funds, where they do share. You're saying that's not necessary, or there's a way for...
Well, so we utilize Hedera. Our wallet Bank Social Wallet is multi-chain. We build all of our tooling that you don't need to know about. You just need to have cheaper access to stuff on Hedera, right? Or if we need immutability, if we need identity, if we need security, if we need hashing, if we need record keeping, right? Like when we went from Web 1, I'll just preface before we get into it, but when we went from Web 1 to Web 2, we didn't just one day shut off everything that was Web 1 and go to Web 2. We migrated, right? And there's even some Web 1 stuff still available right now, like AOL, the walled off AOL, it's still there. IRC just got shut off like a week and a half ago, right? You know what IRC is? IRC just got shut off a week and a half ago, right? So the same thing's going to happen here. We'll have some Web 2 technologies that get Web 3 built around them. And when we say, okay, so now what's happening when I as a member, let me give a very specific use case, okay? I as a member right now, I go to a credit union. And this is more credit unions and not so much banks, because banks Chase tries to do everything under one roof. Credit unions don't. They utilize a structure called a CUSO, a credit union service organization, and so they'll all bundle together. So this is why they're DeFi. This is why they're analog DeFi, okay? They have field of memberships, which means they can only serve that field of membership, just like a DAO. Think of credit unions like DAOs, okay? They form these credit union service organizations. That credit union service organization might do lending, mortgage lending, okay? So 100 credit unions all sending their members to this credit union service organization to get the economies of scale, okay? So now talk about a DApp, right? How does that work with a DApp? If I'm a member of this financial institution, I sign up, I create my identity, I have a wallet with a decentralized identity, a DID, and a self-sovereign identity. It's all in my wallet, it's all tokenized, it's all part of my wallet, right? Now I hand that information along with a hash over to the bank. And the bank doesn't share that with anybody. They don't need to share that with anybody, right? But they do need to know, did somebody get a loan? Who's getting the loan? So how do you do that? Well, there's a guy over here that has this mortgage company, and they say, hey, we're partnered with mortgage company B. We're gonna send you over to mortgage, this is what they already do, right? They say, click this button, go over to mortgage company B. And what's happening is behind the scenes, either they have an API connection that's sending information, or I have to refill it out over there. Well, there's no reason why that same button, when I click it, can't work like a DApp and say, hey, do you want to give your information to this company? And you say, yes. So the attack vector no longer becomes a centralized API with 50,000 records in it, right? Point to point, SSL has been secure for a long time. The problem is not SSL. The problem is all the APIs that people keep opening up and all the network connectivity that people keep opening up. That's Web 2's scale limit. So Web 1's scale limit was the phone number. It was hard for anybody to serve up data or get on the internet and put a website up or control via the phone number. The phone number access was the first limitation of Web 1. Web 2, fraud is what we're starting to see, right? These centralized systems are getting the fuck hacked out of them. Can I cuss?
Yeah.
It's the first time I cussed. The Web 2 systems are getting the hell hacked out of them because everybody's having to open up more and more and more and more APIs. Well, APIs are not the solution, right? We've hit the point because we have spaceships in our pockets.
Right.
And now we have spaceships that can utilize cryptography to do point-to-point communication through SSL, a very, very robust and well-proven technology for over 35 years now, right? And that's how this future will work. So I will have my account at the credit union or multiple credit unions. How many bank accounts do you have? Just one?
One.
Okay. Most people have more than one, 2+, right? So, you'll have 1, 2, 3 accounts, work seamlessly between them. You'll pass your information to company A, company B. When you sign up for Facebook, you'll sign up with your self-sovereign identity, and you know what'll happen? If it's found that the data I shared with company B, I can now prove through cryptographic hashes that I only shared it with company B. Like that set of data, I actually only shared it with you. So I'm gonna send my claim to an AI adjudicator along with my wallet addresses. It's gonna adjudicate, and then it's gonna pull from your wallet that you've had to set up from the CFPB to pay off breaches of your companies. I can see a world where this type of evolution kind of helps the consumer their data, and if it's vectored to me, if I'm the attack vector, right? The FBI has tried to go to Apple and say, hey, Apple, give us the keys to open up people's phones. And Apple's like, we can't fucking do it. That's not the way this is built. If you guys can go hack it, but we can't give it to you. That's not how this works, right? And even the FBI hasn't been able to get into individuals' phones, right? That are lost train of thought there on the specific word, but we reduce the attack vector. We take it from centralized intermediaries to individuals. And it's much harder for an individual to get hacked, right? And if it is, it's usually a single device, single phone, single person. But when Experian gets hacked, it's 25 million people.
Yeah. So, I don't know if you saw the Robert Kennedy speech last night.
I didn't, but I've seen him a lot.
Seen him a lot. He spoke last night about creating, the freedom to transact.
Exactly.
Creating a fair financial system, and this role of social capitalism.
Well, that's so I coined that word back. I'm not sure if I was the first one, but I've been using that word for 6 years now. Social capitalism. Social capitalism is to me, it's the concept of individuals, right? I think capitalism is great, first off. I'm not anti-capitalist. I believe I should be able to work, deploy capital, and create more capital and create more opportunities. I'm more of a social capitalist, though, in that I believe that I should do that directly with you. It's funny that up until a couple years ago, you and I, the only way for us to pay each other was through an intermediary that was somewhere, like we're right here, and we've got to pay 3.5% to transact with each other. That to me is just ludicrous. It's just crazy, right? It's ludicrous, especially with all the data flying around on the internet. And so to Robert's point about freedom to transact, this is why I'm not a fan of just Bitcoin. Like I've talked with people, and to me, we're going back to the days of almost barter. I did something, I made something, you believe in what I did, you believe in what I made. Why shouldn't we be able to have the freedom to transact in what I made?
We should.
We should. And so when we talk about social capitalism, the idea is that you and I should be able to create a capitalistic economy, a microeconomy that serves just you and I. If nobody else wants to use it, don't use it, right? And if those 10 people want to come use it, let them come use it. And it should be interoperable with what those 10 people want to use, right? So we're moving, it's like, think like social media, right? Everybody's coming together, they build groups, they build commonalities. That's what social capitalism is all about. It's about control, and I don't think there's any better way to do it than through the ownership. As financial rails underpin everything we do every day. If you don't have a financial rail, you can't do anything any day. And so owning the last mile of the financial ecosystem is critically important if you want to reduce. To move money across the Fed is pennies. It's pennies. And companies are charging dollars to do it. Why?
Profit.
Well, I would argue two things. That's one thing. Yes, of course they want to make. I want to make profit too. You want to make profit too. Like we all want to make profit. But there are systems that cost more. There are systems that cost less. Right? Like we use Hedera. To send something on Hedera is 0.0001 cent. Right? It's got 32 Fortune 500 companies maintaining nodes. Some people don't call that decentralized. I call that decentralized. They're going to have a fuck ton harder time colluding as 32 Fortune 500 companies than the unknown amount of validators, or who the validators are on pick another chain, right? Right? Those guys, if they collude, it's all public. Good luck. That's a fraud shot through the heart. So the idea of social capitalism, that we can come together, that we have freedom of money, that we have the ability to own our financial institution, it already exists, right? Credit unions can create securities. Credit unions can create financial instruments. Credit unions can make loans, and not through some chain of intermediaries directly. And this is why. So again, having the ability, I really want to stress that, the ability to own the rail, whether it's a crypto rail, right? Because that's when you have Bitcoin in your pocket, you own the ability to transact directly on the rail. There's no fucking intermediary. That's where all of our systems need to get. And the best chance we have at connecting and bridging TradeFi to DeFi, which we're going to need for a while, is in member-owned banking. It is in financial cooperatives. And the beautiful thing about it, I'll come back to the beginning, this structure is available everywhere. Financial cooperatives are available everywhere. Unfortunately, banks, other capitalists who don't want this type of technology to exist or ecosystem to flourish, 120 people raised their hand. I can only move $2.4 trillion into it. It's not even, the whole thing's not even the size of the 10th largest bank in the United States. It's not because people don't want to raise their hand and get in. It's because the technologies are being suppressed around allowing people to get in. We're changing that.
And that's where we get into regulation, right? There's going to be people like banks going to fight like hell to have regulations that doesn't help you and I, right? What's been the history of the evolution of the regulation? Where do you see it headed?
So I'm a couple things. I'm not a fan of custody. I think there are use cases for custody. So let me walk that one step back and explain it again. There are use cases for custody. If I'm getting my Bitcoin lent against, there's no reason why a multi-party wallet signed by 3 financial institutions, 3 credit unions, right, that sent me some money to do something else because I've got a Bitcoin-backed collateral loan against my house or something like this, right, can't be in some type of custodial multi-party situation, right? But custody as the front line of the evolution is just more of the same that we've been dealing with, right? You're entrusting them with everything, and I don't think that we have to. That's the whole, like, if Satoshi is alive, maybe it's Hal Finney, maybe he's not alive anymore, he'd be rolling over in his grave if he heard that we're, thinking about moving solely to custody, and people are screaming in the streets, custody. What are we doing? What are we doing here? That's not what this world is about. That's not what this future is about. So when I look at the regulations, I'm not quite I think what repealing SAB 121 did, it did one good thing for us. It showed us that there is a willingness in in Congress to stand up. There are people starting to understand. Do I think repealing it was necessary? No. Half the people who I talked to don't even know what it was. Do you know what it is? Do you know what SAB 121 was?
When I look at the accounting rules and stuff, that makes sense. It's like with banking accounting rules.
Yeah, it makes sense. It's like, hey, if you're going to hold my Bitcoin, forget everybody else's Bitcoin. If you're going to hold my Bitcoin, I would like to know that if you lose it, because it's not like dollars. You can't go fucking print more from the FDIC and say, hey, FDIC, give me more Bitcoins. No. You got to go buy it from the market. Well, you know what that means? That means that you're probably not going to be able to do it because it's not going to cost as much as it did when you lost my Bitcoin. And so why do we think it's a good thing and it was a recommendation, right? It's like, hey, we're not telling you what to do. We're recommending, right? So that if we come in and you're like, oh yeah, we lost everybody's crypto and we don't have enough money to buy it back. And they're like, well, we recommended that you shouldn't fucking do that. So why did you do that? So to me, like, okay, the good thing about SAB 121 was we saw who is for, who's against. Fit 21, I think one interesting thing about it is, you know what the 21 in Fit 21 stands for?
No.
21st century. Why the fuck are we looking back? Why are we looking back? Why the fuck are we looking back? Let's look forward. Let's create innovative technology policy that fucking looks forward 25 years. Right? Yeah. Open up innovation. I think, Kyle Hobbman says this all the time. He's the regulator of the NCUA. The best thing that the Clinton-Gore administration did was when the internet came out, they didn't release guidance, they didn't release policy, they didn't release laws. They put 10 items on their website, the government web, the whitehouse.gov website in 94, 93, And that website was only a few years old or a few months old at that time. And the first thing on the list was, let the private sector innovate with the internet. That's why we won the internet, because we were allowed to innovate. We didn't get new laws. We didn't get those laws didn't come, and that's what I advocate for. Like, I personally think the Howey test being 4 sentences is good. I've read all of the enforcement actions. I've read all of the, you can't just put the word crypto in front of something and issue a security. None of us want that. I'm sorry, that's just my stance on it. I think, everybody can always do better. Everybody can always move faster. We can't, all of us. I'm sure we've all not moved fast enough at some point in our life, right? I think, though, that having the current regulatory environment, to me, is one where I'm not pushing for a lot of new laws. The problem with new laws is once they go on the book, they never come off.
Oh yeah.
They never come off.
I know.
You've never, we repealed SAB 121. Well, that wasn't a fucking law. It was a recommendation. So it's super easy to repeal a recommendation.
Right.
But a law, once a law is on the books, the likelihood of that getting taken off it hardly never happens. And so I believe we have the majority of the laws that we need to innovate, right? Like Kyle Hoppin says this all the time. When you come to me, I don't want to, like, if you were coming to the regulator 25 years ago to tell them about what the internet was going to be in 10 years, you wouldn't tell them about Oracle databases and SSL connectivity and all this shit. What would you say? You would say, hey, you push a button and a Honda Kia pulls up in front of you and you get in and you leave and it pays for all itself. That's what the future looks like. And the regulator would be like, yeah, I want that fucking future, right? They don't care about what's happening behind the scenes. And so many times we have people go in and talk and try to utilize the technology as the differentiator. It's not the fucking technology. What is the differentiator is the outcomes. What's going to happen when somebody implements whatever your platform is? What's the outcome? What's the result of that? Is it better, faster, cheaper, right? Does it make lives? Is it more efficient? Does it impact people in a more beneficial and positive way? That's what you got to focus on. And there are too many crypto companies that go in there talking about crypto and talking about Web3 and talking about shit that nobody cares about. Nobody cares about that shit. We care about it. Let me take, not nobody, we care about it. Regulators don't care about it. Congress, they're there. I mean, and their job is the will of the people, right? Yeah. So they're there to go where the people tell them to go. Whether those people are corporations or it's a different story. But I'm not a big believer that we need tons of, and this is why we have started from the regulatory side. So, one thing that I think is also misunderstood, everybody's afraid to go talk to the regulator. Well, I don't care what laws come through. Do you know who enforces those laws? Who makes the interpretation on those laws? The regulator. Yeah. It's the regulator. So I don't care what law gets written, because at the end of the day, there's a guy who's going to read that law and come up with his own interpretation. That's the separation of powers. So I think we're scared of the wrong people, right? The regulator, you're going to have to work with them regardless of what laws or no laws come out. So we've taken the approach of, let's go work with the regulators. Let's talk to the regulators. Let's help them understand not what Web3 is and not what databases are. They don't care about that. Let's help them understand what the outcomes of these new technologies are. And then they'll say, okay, well, are you issuing a security token to get this done? No, we're not. And here's why we're not. And here's how it's not, right? But I'm not against talking to the senators. I just think we wanted to take a different path, and it's working, right? So people are coming from the left, people are coming from the right. We wanted to make sure the regulators understand. We've had discussions with around the world, right? Bank of England, the Austrac, FinTrack, FinCEN, of course, many of the 3 and 4 letter regulators here in the United States, but we've talked all over the world, and one thing remains consistent is that they all understand that this stuff is here to stay, right? Like, I can't talk about who the regulator was, but the very large central bank not our central bank, I can say that, but a very large central bank. We had a discussion, and they brought me in, and we were talking about what needs to happen. What's this ecosystem? And they're all talking about, Bitcoin and this and that. And I waited till everybody got done talking. And I said, guys, I just have one question. How are you going to stop it? How are you going to stop Bitcoin? Just don't even look at the rest of them. How are you going to stop Bitcoin? You going to turn off the internet? You're going to try to filter the IP protocol for Bitcoin? Yeah, good fucking luck with that. Why do you think the fucking dark web was created? Go stop that first, right? Go stop cash money laundering first. Like, you need to embrace. You need to understand that it's here. You need to understand that maybe this technology is way better than anything we ever had. Because if we want to stop fraud, if we want to understand where money's going, it's way easier. You can't do it in your siloed banks that you have now. This technology blows away anything we could do in siloed banking databases distributed across the country. It's not even it's orders of magnitude, multiple orders of magnitude more secure, more fraud resistant.
Not even close.
Not even close. It's not even close. And so when they heard that, when they hear those types of comments back to them, it changes their perspective. And then this banking regulator about 6 months later came out with what I think was some pretty decent guidance on, hey, we're going to work with it. We're going to figure out a way to make this happen because, we understand that this is here. It's here to stay, and we probably need to leverage it, take advantage of it so that we can start to. I really do feel like most government regulators, they're inherently good. I don't feel like we've got a bunch of devils out there trying to hurt the people. It's about, they're dealing, we look at it with one person, like, oh, you're not protecting me. Well, they've got to protect 330 million people, 450 million people, right? And so sometimes their reactions are knee-jerk, like, oh, fuck, something happened, shit, I need to go get that, because it's all downside and no upside. Right. Regulator job, people miss this a lot. It's like, if they don't catch something, as Kyle Hobbs says, nobody wants to have on their resume, the iceberg watchman for the Titanic, right? Like right. That's not a job title that you want to have on your resume. And it's the same thing with regulators, right? They don't want to be the guy who you get no upside for pushing something good through, hardly any, right? Oh, I let this thing come through, it just works, nobody ever sees it, it's just behind the scenes and it works and it's great. But as soon as something blows up, you're the guy on the Titanic, right? Yeah. Who's supposed to be watching for icebergs and you didn't. And so that's the mentality of regulators. That's why we have to approach regulators differently than we do Congress. We have to talk to them about the outcomes. And there is definitely a positive result at the end of that opportunity, for sure.
Sounds good to me. Well, I love talking to you. I want to thank you very much for your time. And by the way, you're the second person in 2 weeks who brought up the Bill Clinton, Al Gore thing and said their mantra was do no harm and wait and see.
Right.
Right. So, yeah, thank you for that too.
Right. I mean, that's what we need to do. Do no harm and wait and see. That's exactly right.
So, again, thank you very much for your time today. And one last question. How can people find out more information about you, about your company, about what you do, and become clients, or how the credit unions become your client? How can you do that?
Yep. So you can download the Bank Social wallet on iOS, Android. Go to banksocial.io. You can join our Telegram. We have a massive community, great community. We've got the Bank Social token that's got a DAO that allows you to participate in all these lending components. There's some other components to it as well. But yeah, banksocial.io is probably the first place to go, and then download the wallet, getthewallet.com. That's kind of the correct button to get there. And we do a lot of AMAs, we do a lot of talks. We're always keeping our community informed about the things we're doing and how we're kind of addressing things. But yeah, that's how you can find us. Thank you so much.
Thank you.